The quiet before the explosion is deafening. While the spot market for Shiba Inu struggles to find direction, a silent battle is brewing in the derivatives world. Trading volume has plummeted, but a critical metric, open interest, is stubbornly rising. This divergence signals a massive buildup of leveraged bets, creating a coiled spring effect. Is this the calm before a violent price swing, or simply a sign of market exhaustion? We analyze the futures data to decode the next move for Shiba Inu. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more SHIB news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The Shiba Inu market is currently in a state of consolidation, following a period of high volatility earlier in January 2026. This pause in the spot price action has shifted the focus to the derivatives market, where traders use leverage to speculate on future price movements. The derivatives market provides a crucial lens into the collective sentiment and positioning of professional traders. The current environment is defined by a significant divergence between two key metrics: a sharp drop in trading volume and a simultaneous increase in open interest, OOI. This unusual combination suggests that while the immediate frenzy has subsided, the underlying speculative pressure is intensifying, setting the stage for a potential high liquidity event. The most significant development in the Shiba Inu derivatives market is the dramatic collapse in trading volume. According to data, the 24-hour derivatives volume has fallen by approximately 48%, settling at around 141 million pearls and $6,000. This slump indicates a sharp decline in the number of contracts being traded, reflecting a loss of short-term momentum and market participation. However, this drop in volume is juxtaposed against a subtle but critical rise in open interest, OI, which represents the total number of outstanding derivatives contracts held by market participants, and has ticked higher by 3%. This divergence is a powerful signal. It means that while fewer new trades are being executed, low volume, the total amount of capital locked into leveraged positions is increasing, rising OI. This buildup of leveraged positions suggests that traders are placing long-term bets, anticipating a major price move, but are currently waiting for a catalyst. The spot market for Shiba Inu is currently trading at approximately 830 units, hovering near a critical support level. The price action reflects the uncertainty stemming from the derivatives market's mixed signals. The low volume suggests a lack of conviction from both buyers and sellers, leading to a tight trading range. The primary market reaction is one of anticipation. Analysts note that the rising open interest, coupled with the low volume, is creating a liquidity void. This void means that when a price movement finally breaks the current consolidation range, the resulting cascade of liquidations from the built-up leveraged positions could lead to an exaggerated high-velocity price swing. The market is effectively coiling, and the direction of the eventual breakout will be determined by which side, long or short, is forced to liquidate first. The funding rate, which is the periodic payment made between long and short traders, is currently near neutral. According to reports, this is a key piece of evidence, as it indicates that neither the long nor the short side is paying a significant premium to maintain their positions. A neutral funding rate, combined with rising OI, suggests that the market is in a state of equilibrium, a temporary balance that is often shattered by a sudden external event. This is a classic setup for a short squeeze or a long squeeze, depending on the catalyst. Analysts are interpreting the OI volume divergence as a sign of a market preparing for a major move. As per on-chain data, the total open interest is holding strong at over $100 million, a level that was reached after a significant 20% surge earlier in the month. This suggests that the initial bullish sentiment from early January has not been fully unwound, despite the recent price correction. Expert commentary suggests that the current situation is a healthy consolidation in the spot market, being amplified by speculative positioning in the futures market. The low volume is a sign that the profit-taking wave from the spot market is exhausting itself, while the rising OI shows that institutional and professional traders are quietly accumulating or maintaining their leveraged positions. The critical factor remains the price level, According to data, if Shiba Inu can hold the 825 unit support, the leveraged long positions will be validated, potentially triggering a short squeeze that could propel the price toward the 1,004 unit target predicted by some models. The Shiba Inu community, the Shib army, is reacting to the derivatives data with a mix of confusion and excitement. While the spot price remains subdued, the technical nature of the derivatives market is often viewed as a leading indicator by savvy community members. Discussions on social media are focusing on the implications of the neutral funding rate, with many interpreting it as a sign that the market is not yet overbought or oversold. According to reports, developer hints and ecosystem updates continue to provide the fundamental backbone for the long-term narrative. The focus remains on the utility of Shibarium, the Layer 2 solution. The recent update from the core team regarding the SOU compensation framework, following a minor technical issue, is a clear attempt to reinforce the project's commitment to long-term stability and utility, which is essential for attracting the sustained capital required to support the current open interest levels. The community understands that a successful Shibarium launch and adoption is the ultimate catalyst needed to resolve the current derivatives market tension in a bullish direction. The derivatives market provides a clear framework for the short-term and long-term forecasts. The immediate forecast is for a continuation of the high-tension consolidation. The low volume will likely persist until a major price level is broken. The risk of a sudden high-magnitude price swing is extremely high due to the elevated open interest. If the price breaks below the 825 unit support, a rapid deleveraging event could push the price down further. Conversely, a decisive break above the immediate resistance at 900 units could trigger a short squeeze, rapidly liquidating short positions and driving the price toward the 1,004 unit mark, representing a potential 17.05% return from current levels. The long-term forecast is fundamentally tied to the maturity of the Shiba Inu ecosystem. The continued presence of high open interest, even during periods of low spot volume, suggests that professional traders see long-term value in the asset. The successful implementation of a robust, automated burn mechanism via Shibarium is the key to sustaining this interest. If the ecosystem can deliver on its utility promises, the derivatives market will serve as a powerful accelerator for price appreciation, turning speculative bets into sustained capital inflows. The long-term outlook remains bullish, provided the utility narrative is executed effectively. The primary risk in the current market environment is the liquidation risk inherent in the elevated open interest. According to data, the $103,087,000 locked in leveraged contracts represents a massive pool of capital that could be wiped out in a sudden move. This is a double-edged sword. It promises a violent upward move if the price breaks bullish, but it also guarantees a severe crash if the price breaks bearish. Neutral insights from analysts emphasize the need for caution. The low volume means that any large market order could disproportionately affect the price, triggering the liquidation cascade. Furthermore, the market's reliance on a neutral funding rate means that a sudden shift in sentiment could quickly turn the rate negative, signaling aggressive shorting, or highly positive, signaling an overheated long market. Investors should monitor the 825 unit support level closely, as a failure to hold this level could initiate the deleveraging event that the derivatives market is currently poised for. So, the stage is set. The Shiba Inu derivatives market is a ticking time bomb, with low volume masking a massive buildup of leveraged bets. The battle lines are drawn at the 825 unit support, and the next few days will determine whether the market unleashes a short squeeze or a painful long liquidation. Keep your eyes on the open interest, stay sharp, and remember, in the world of Shiba Inu, the biggest moves are often born in the deepest silence. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.